Hi, thank you for joining us and welcome to this installment of David W. Klossing's Clarifying Tax Situations. If you've been searching the internet for answers to your tax-related questions, you can finally relax. You've found them. And you found someone who can take a complex, confusing, and often worrisome situation and explain it all in plain language so you can truly understand your situation and have an idea of your possible options. California licensed attorney and CPA David W. Klossing has more than 20 years of professional tax, accounting, and business consulting experience, coupled with extensive knowledge about federal and state tax codes, regulations, and case law. Mr. Klossing practices in both domestic and international taxation, business law, and estate planning. He recently chaired the State Bar of California Tax Procedure and Litigation Committee and the Orange County Bar Association's Taxation Section. He is a member of the American Bar Association and the California Society of Certified Public Accountants. Mr. Klossing uses his experience as a former auditor to protect his clients' interests during audits, criminal investigations, or tax litigation, as well as help them to avoid problems in the first place whenever possible. He has assisted thousands of businesses and individuals and has a proven record of favorable results. Thank you so much for your time. And now please enjoy this episode of David W. Klossing's Clarifying Tax Situations.
If you're tuning in to watch this video, you're worried about the fact that you just got a notice from the IRS, you know you're going to be audited, and now you're really worried because deep down in your heart you know you played some games on the return that's being audited. And the concern is, will I go to jail for income tax evasion? That's a pretty scary thought. This is even scarier if you've cheated in the year before that's being audited and there's another year after the year that's being audited that's already been filed. Because those three returns, if all three of them are seriously misstated, can show a pattern of behavior, and that is what's really scary in an income tax audit. Okay, because that can look like income tax evasion, even if they're mistakes or something else. Let's start with how returns are selected for audit. When that audit notice shows up in the mail, all of a sudden you feel like they've been digging through your trash, they've been talking to your neighbors, all these crazy thoughts go through your head. The bottom line is the way returns are selected is actually, it's pretty automated. There's something called the differential scoring system. Now, what the IRS has done is they submit your return to statistical sampling. If you've ever taken a statistics class, it's that bell curve, and we're talking about anything that's on this side of the bell curve or that side of the bell curve, the 2.5% outliers. Every time you have one of those 2.5% outliers, the IRS might start to think that you've been cheating. What winds up happening is if you have an outlier statistically, you start getting a worse and worse score the more outliers you have. At the end of the day, after the IRS has gone through and analyzed all returns via computer, they wind up with the worst score you can ever get, which is a 999, then a 998, then a 997, etc. Well, all the 999s are selected first, they're audited. If they have time, they go to the 998s, 997s, 996s. They just work their way down till they're out of audit budget, then they go the next year. That's how the bulk of civil returns are selected for audit and auditing. That's where the expression pigs get fat and hogs get slaughtered comes from. If you have a super bad score, a computer is looking at your return and going, I think this guy is playing games, let's audit him. There's lots of comparisons done between information reported on your return and information supplied by third parties. All 1099-Ks are compared to your return. All 1099s of any type, divs, interest, W-2s are compared to your returns, 1099-Bs from stock sales. The IRS has the ability to see if you left off an item of taxable income from your return just from the information it receives from third parties and it compares it to your return. Those spark a lot of audits. What's a really scary thing that's happening right now is 1099-K audits. Just recently, over the last 3 to 5 years, the IRS has been getting reports from credit card companies, from debit processing companies, as to the amount of electronic deposits a business may have. Let's say you're a restaurant and you report $1.2 million in sales for the year on your tax return. If the government gets 1099-Ks that add up to $1 million, what you're saying is, I only had $100,000 of cash receipts, income from other sources. Well, the government knows that most restaurants are cash intensive, and there should be a more realistic ratio between credit card sales and cash sales. Immediately, if you get selected for audit in that situation, it looks pretty bad from the get-go because it appears that you've got unreported income. All it takes is $10,000 of unreported income to result in a referral during an audit to a technical fraud analyst. Their job is to decide whether to pass the case on to the Criminal Investigation Division for possible criminal investigation and development of the case for criminal prosecution. So that's scary. If you're going to have problems in your filings, it's much better to have problems in over-reported deductions than it is to have problems with underreported income. Also, returns can be selected because of red flags. What they're looking for is things like trade or business deductions, where you've got personal expenses buried in with your trade and business deductions. Frankly, if you do enough of it, if you deduct your vacation in Hawaii and you deduct your personal use of your airplane and the personal use of your boat, and you write off your country club membership and all of your groceries, you got a problem, okay? That's fraud, and that's one of the things they look for. If you have net operating losses in your returns, a lot of times they'll come in and they'll select a return for audit just because it's got net operating losses in it. The worst part with that is the return can be 10 years old that threw off the net operating loss, and they can go all the way back to the return from 10 years ago and prove whether the operating loss was valid or not. And if you don't have the records, if you can't prove it, you lose the NOL. Same thing with capital loss deductions. You had a capital loss 10 years ago, you can only utilize $3,000 of a capital loss each year against your active income, or it can fully offset your capital gain income. But if you have a carry forward for several years, you can get audited and they can look at that in the current year even though that loss happened 10 years ago. Amended returns that throw off huge refunds, huge audit red flag. Government hates to write checks back to people, and frankly, if the check is big enough, they may select your return for audit just because you produced an amended return. The least scary type of an audit is correspondence audit. That's where the government has matched the information they have against your return. A computer sends out an automated notice, and boom, they want you to write them a check, and it usually says, write me a check for $30,000 if you agree with his findings. We didn't see you report your W-2 from Starbucks. We talked about 1099-K. The worst part about these correspondence audits is a lot of times it can be a repeating issue. You can find yourself audited over the same issue year after year after year if there's some sort of a matching problem. You know, the worst part with correspondence audits, there's no guarantee that the government won't expand the audit beyond the one item they're looking for, especially if it's a large amount of unreported income, where they're saying, hey, we added up all your 1099s from third parties for the year, that's $2 million worth of income. We see you only reported $1.4 million. You owe us tax on $600,000 of income. If you just sign that and send it back, you're asking for it, okay? That could just be the first shot across your bow, and they want to see how easily you give up to that. So I wouldn't do that without counsel. The worst part is that the people that work in the correspondence centers are sometimes the lowest level employees of the IRS. And if it's a complicated issue that arose during a correspondence audit, sometimes you're going to have to wait. You're going to write 4 or 5 letters over the span of a year. Each one of them is going to be ignored. Finally, they're going to send you a 90-day letter, a statutory notice of deficiency. You need a guy like me to file a tax court petition. A lot of times during the appeals process, I can solve the problem once I get the chance to talk to a live human being. Dealing with these correspondence units is not easy. An office audit. Much scarier. The rooms they actually audit you in can be very scary, where there's a door on one side where they have to buzz you in, and they come in from another door on the other side where all the personnel are at, and there'll be an alarm underneath the table. They can press a button if things get out of hand, and in come running the guys from the Criminal Investigation Division with guns and badges. So if you're ever in an office audit, you really need to behave yourself. That's the one type, the secure type. There's also the type where they walk you right to their desk, and you'll be surrounded by Cubicle City, sitting there talking to an IRS auditor with 15 other auditors in ear distance of what you're saying. The worst part about representing yourself in an office audit, or a field audit for that matter, is if you make criminal admissions about your returns, that can ramp the case up from a straight civil issue into a criminal issue. Also, your body language. About 70% of communication is nonverbal. You can't control what your body says. Your mouth can be saying yes to a question, but the tenseness of your body can send off, that really made me nervous, and they can start digging, and they're taught to read your body language. Again, it's a very, very intimidating environment. And frankly, they'll write down everything you say, and you've just given the IRS direct evidence of your criminal intent, and that's bad. Any type of statements you make are dangerous. Lying to them is a felony. You're talking to a federal agent. Never go to an office audit or let an auditor come out to your home or your business without having representation there. In a correspondence audit, normally they're looking at 1 year at a time. In an office audit, they're looking at 3 years. They'll start with the 1 year that's in front of them. Usually the computer will pick out 3 areas for them to look at. And if they hit pay dirt in any one of those 3 areas, it's within their discretion to expand the scope of the entire year they're looking at. If they hit pay dirt in the year they're looking at, they'll go to the years that are open to the statute, usually 3 years at a time. One before the year they're looking at, one after the year they're looking at. And again, this can become very dangerous if they find a pattern of the same type of mistakes over 3 years. That starts to look purposeful. We call this reading the IRS playbook. What you really have to worry about also is the 6-year statute of limitations. If there's any foreign reporting problems that they come upon, if you've got any type of foreign non-compliance, you haven't done your 8938s, you haven't done your FinCEN 114s, you haven't done your 5471s, and there's offshore sources of income that haven't been reported for tax purposes, you're looking at a criminal scenario. Don't go anywhere near that audit without representation. That's a separate series. That's the FBAR series. What you need to know is the vast majority of criminal cases that the IRS prosecutes come out of civil audits. If you've cheated on your return, you don't want to deal with this by yourself. You need representation. There's also another type of audit that's even scarier than an office audit. That's when the auditor wants to come out and inspect your home or your business. In your home, if they insist upon coming out to your home, pick up the phone and call me immediately. If they want to see the inside of your home, is because they're looking at the art on the wall, they're looking at the furniture, they're looking at the television, they're looking at the cars in the driveway, they're looking at the neighborhood. A lot of times they'll say, I'm just interested in checking out the size of your home office. I don't want them in your home. There's another way to prove your home office. Give them the schematic of your home, take pictures, get out a tape measure, take a picture of that. Keep them the heck out of your home. If you can't find the gumption to do that on your own, hire me, I'll keep them out of your home. I don't want them assessing your net worth and comparing that to the tax returns over history and saying, how is it somebody that makes $30,000 a year is living a block from the beach in a mansion and is driving a Maserati? You got problems if that's what's happening. I've got situations all the time where the auditor throws up their hands and goes, these books and records are such a mess. I have no idea what the proper return should look like because the accounting's a mess. This isn't good for you. The IRS is not going to get out a shoebox and start adding up all your receipts and redo your accounting and balance your bank accounts and make sure your books make sense. They're not going to do it. What they're going to do is they're going to get frustrated. They're going to assess you on all the income that went in your bank account. They're going to call that income. Then they're going to disallow all your expenses as non-provable, and it becomes your problem. Sometimes what I need to do in that situation is come in and do a reconstructive accounting, clean everything up, prepare a revised return that matches that accounting if there's a big difference between the original and the first one, and then take it from there. The burden of proof is always on the client. It's on you. You need to prove to them that your numbers are accurate. The auditors use a take it to cash approach. They do a procedure in every audit where they look at all the cash that went into the bank accounts, all the business bank accounts, all the cash that went out of the business bank accounts. They make the assumption that all deposits into your business bank accounts are income unless you can prove otherwise. If it came from a loan from a friend, unless you can prove that it's a loan, it's income. It goes the other way. All the expenses are personal non-deductible unless you can prove their business. So that's where the expression prove it or lose it comes from. The IRS will disallow expenses that cannot be proven. It's that simple. Again, the big issue is unearned income. Okay, I can't stress this enough. Don't face a taxing authority. I don't care which one, whether it be the IRS, Franchise Tax Board, the EDD, or the Board of Equalization. Don't face those people alone if you know you cheated. That's just insanity. Don't take a bunch of stupid actions and compound them with more stupid actions. You need a buffer between you and the taxing authority. period in that situation. What the government will be looking for is any evidence of intent. That's the hardest element of any tax crime to prove, is that you intentionally got things wrong to reduce your tax liability. And really the only direct evidence they can get, aside from circumstantial evidence, which I'll explain later on, is words that come out of your own mouth. You really don't want to be talking to these people if you cheat on your tax return. You just don't. Circumstantial evidence is all sorts of evidence that doesn't come out of your mouth. It's what your books and records say. It's what your employees say. It's what your next door neighbor says. It's the stuff they can pick out of your trash can. It's the stuff that they find on you in the Wall Street Journal. You can't control that, but you can control the direct evidence. And guess what evidence is most persuasive with juries? It's direct evidence. And if they can, they'd love to get you lying and prove that you lied. Number one, that's a felony in and of itself. And number two, it's easy to point to a jury that, look, they even lied in the audit process. These guys lied all the way through. They lied on the return, they lied during the audit, they're lying to you now. Stick them in jail. Don't mess with it. You need to realize, no matter how smart you are, I've got doctors, lawyers, engineers as clients. I've got people who wrote books. I've got software developers. I've got some very, very intelligent clients. No matter how smart you are, you're outgunned. You need to understand that these people deal with audits on a day in and day out basis. They have playbooks they're following. You don't understand them. I don't care how smart you are. You're not going to talk your way out of this. If you've cheated, don't deal with it on your own. A lot of people have this idea that everybody at the IRS is unintelligent. That's wrong. The upper levels of the IRS are some of the sharpest people in the country. I've had auditors come in that have 20 years experience, that are CPAs, that came out of private industry, that know the stuff better than my staff at times, and all my staff has master's degree in taxation and 18 years of experience. Here's what I bring to the table. I'm a CPA, I'm an attorney, I have a master's degree in taxation, I have 20 years of experience, actually more than that. Way before I ever became an attorney, I was dealing with tax controversies. And I was an auditor in public accounting for several years of my career. At one point I had a staff of about 15, a corner office, and I was on a partnership track. I dealt with some of the most sophisticated audits known to man: IPOs, private placements, employee benefit plans, VEBAs, for-profit entities, you name it, I've seen it. I get the audit methodology. Most of the time I use that background in auditing, even though it wasn't with the IRS. The audit process that I was taught back in school is nearly the same audit process that they were taught. Everybody that becomes a CPA or goes to work for the IRS as a revenue agent has a bachelor's degree in accounting, which is the language of business. They have auditing education. I had auditing education and experience. I'm usually a couple steps ahead of them. I know where they're going in the audit before they get there. Here's the big plus. You can't go to any tax professional on the planet when you cheated on your tax returns, sit down and say, help me, unless that tax professional is an attorney. Why is that? It's because an attorney has attorney-client privilege. CPAs don't. Frankly, if you tell them you've cheated on your tax return and you proceed to go through an audit, if the government wanted to, they could call them as government witness number one and force them, under penalties of contempt of court, to give testimony against you and repeat back to the court the criminal admissions you made to them. So if you've cheated, only one professional you can talk to: tax attorney. Start there. Don't talk about it with your neighbors. Don't talk about it with your priest. Nobody. All right? Anybody you talk to is toxic. Anybody you tell that you've habitually cheated on your tax returns can report you to the IRS and get a whistleblower award for turning you in. You're creating a financial incentive for people to turn you in. You need to keep quiet. An attorney can protect your communications with that attorney. It's called the attorney-client privilege. You say, Dave, I cheated on my tax return. The only person who's going to know that is the attorney, and maybe some of the staff he brings on board to protect you during the audit, and he'll do that under what's called a Covell letter, so they have attorney-client privilege too. Also, work product. When we start putting notes together of everything that happened in your history and we start preparing for the audit, all of that stuff is protected under the work product doctrine, as long as I can expect litigation out in the future and there's real risk to you. A good tax attorney is going to shield you from the auditor. I don't want you in a position to have your body language give you up, have your words give you up. You need to realize that any statements that you make, any documents produced, they're admissible evidence in a subsequent criminal trial. And there's not a whole lot more persuasive evidence that could be given to a jury than your own words, especially if they catch you lying and they're able to prove it. Okay, remember, lying to a federal agent is a felony, not to mention you cheated on the tax returns as evasion, that's an add-on crime. There's something called obstruction that you can get yourself into. If you decide to pull an Arthur Anderson and shred all your records or lose all your records or have a fire and they're able to prove it, that's a felony in and of itself. You can't do anything to impede their investigation. There's also the possibilities of other tax years coming under audit and a pattern being shown. And you really need someone doing damage control. And here's something pretty scary. If you do get through the federal audit and you get through it cleanly, there's also the possibility that the IRS shares the information it gained during the audit, hands it off to the state of California, or vice versa. If you're being audited by the state of California, what they learn in the audit could be handed off to the Fed. Just because you get through a federal audit without criminal charges doesn't mean a subsequent state investigation wouldn't put you in jail, and vice versa. Oh, here's something very, very important. The original preparer is your kryptonite. Most people, when they got audited, they go right back to the original preparer and say, hey, you prepared this return, you go talk to the IRS about it, these are your numbers, if anybody screwed up, it was you, it wasn't me. Look what's actually going to happen in that situation. You and the original preparer have a conflict of interest, especially where you cheated. If he knows about it and he facilitated the cheating, you both go to jail. If he didn't know about it and he didn't catch your cheating, he may get hit with some preparer penalties and such, but he's not going to jail with you. And matter of fact, if he worries about his reputation, he may bury you to save his own reputation. Check this out, Mr. Auditor. These are the books he gave me, and if there's any games played, I didn't prepare these books. The client's accountant prepared these books. His in-house client, wasn't me. I posted these journal entries. I had something to do with this, and that was all clean, but what he did was not kosher, and that wasn't me, that was him. Government witness number one against you will be the accountant. So you don't want to talk to them. They don't have attorney-client privilege. You can't even discuss the problem with them. Most CPAs are taught the moment there's evidence of tax crime that took place on your watch, they are to kick you out of their office. The preparer's file is the smoking gun of your tax fraud. Any incomplete information in there, inaccurate, or worse yet, if they can prove that there was a cooked set of books that was handed to them, and they can prove it because they've got a file that demonstrates the information as it arrived and the information as it was massaged for the return, that all CPAs and most reputable tax preparers are able to prove what their involvement was with your return. Any involvement involving fraud they had nothing to do with, that's on you. And they'll be the ones making the case to the jury. So, in conclusion, hiring my firm can make all the difference. As of this date, as the shooting of this video, no client I've ever represented has gone to jail. And I can tell you that's just a matter of time. I've got a couple clients I'm representing right now that really look like they're heading that way. If it's a criminal investigation that comes in the front door, as in those cases, they have a 90% conviction rate. My whole job in representing you to audit is keep the audit going from civil to criminal, keep it with the civil auditor, keep it away from the criminal investigation department, and try and make sure you don't go to jail. If you do go to jail, if I can get them to look at the situation and find negligence, I'll give it to them all day long. Negligence is a 20% penalty. If you have $1,000 of tax owed, you'll pay $1,200 in interest back to the original filing date of the return. On the other hand, look what happens if they get you criminally. You're looking at jail time, $250,000 penalty on a lot of these felonies, restitution, which means you're going to pay back all the tax fraud you ever committed over your lifetime. And sometimes I think what they do is they figure out what your net worth is, and then they figure out how many years they have to go back with your tax cheating to get your net worth, and then they quit going back. Again, if they prove fraud, there's an unlimited statute of limitations. Believe it or not, you are liable for the cost of prosecution if the government charges you for a tax crime. If you're a professional, if you're a lawyer, accountant, any type of professional that requires a license, acts of moral turpitude, tax evasion, that'll result in the loss of your license. Now you're not a doctor, now you're not an accountant, now you're not an attorney, okay? Now you can't make money anymore. There's the social signatism that comes from being criminally prosecuted. I mean, the only reason they prosecute people is to publicize it to the biggest extent possible. If you're a doctor, they're going to put it on the trade magazines that they stuck you in jail. They're going to make sure your peers that are doctors see they put you in jail. Same for any other profession. There's a social stigma that comes from being criminally prosecuted. You try getting a job when you say you got a felony on your record. Tax evasion on your record. That's just, how do you work from there, even if you find another profession? There's the public humiliation of walking through a drugstore and someone recognizes you because your picture's in the paper. You just don't need this stuff. Again, you need to realize that many criminal prosecutions actually stem back or reflect back to actual statements that came out of the representative's mouth, whether the original preparer or from the client themselves. Stay away from the original preparer. Don't go near this thing yourself. Hire a professional like myself. If you're not going to hire me, hire someone like me. Don't attempt this on your own. And I already mentioned my perfect record of success. That's of today, but I'm sure that's going to change eventually. I'm either lucky or good. I haven't quite figured it out, but so far it's working. I realize that receiving mail from the IRS is terrifying. When I do my elevator speech, I say, "Hi, I'm Dave Klossing. I'm a tax attorney. I'm a CPA. I have a master's degree in tax, and I'm an amateur sleep therapist." I wait a couple seconds. The room starts to giggle. And then I say, "I help clients with the type of tax problems keep them up at night. If you cheated on your tax return and you're under audit, if you're not sleeping at night, you just don't get the situation. Give me a call or call any other of the reputable criminal tax defense attorneys in this town, in this city, in this county. There's a few. Even if you're not impressed by me, call me. I'll give you a good number of someone to call." Thank you much for your time.
Thank you for joining us for this installment of David W. Klossing's Clarifying Tax Situations. We hope that this has helped to clarify some things for you and answer some of your questions. If you have further questions, please take a look through the rest of our videos, as you may find some helpful information in another episode, or in our extensive written Q&A content. If you still have concerns about a specific personal or corporate situation, please feel free to contact us. David W. Klossing is admitted to practice before all California state courts, the United States District Court for the Central District of California, and the United States Tax Court. As a former auditor and now combination tax attorney and certified public accountant, he is uniquely qualified to help his clients navigate the often treacherous waters of the tax world with a proven record of success. Thank you so much again for your time and interest in how we may be able to help you. Please don't hesitate to call if something is worrying you. We would be very happy to help. Just call or email for a reduced rate consultation.